Hello, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news of drift, decline and unresolved issues that continue to fester. First up, there are some indications China and the US are building the basis of agreement in their trade spat. China is said to be moving forward tariff reductions, and the US is indicating these may be enough to halt further tariff increases. And there are Chinese reports that new orders for American soybeans are coming. But markets seem to be treating all this with scepticism. They open slightly higher, but on this news they've drifted lower in mid-afternoon trade. But maybe the drift lower is more to do with an acrimonious meeting President Trump had with congressional Democrats, a meeting he called to get funding for his border wall. It quickly descended into farce, with the president threatening to shut down the federal government unless he gets what he wants. In the US, a small business confidence survey came in lower than expected. It is still positive, however, but the shift lower was something that few saw coming. In China, banking sector debt growth rose more than expected in November after a sharp drop in the previous month. Chinese banks extended $265 billion in new net yuan loans in November, slightly more than analysts had been expecting and up from the previous month. Despite this, total social financing, their measure of broad money, grew at its slowest pace in a very long time, suggesting that their overall economy is cooling and probably faster than Beijing would like. Chinese car sales fell in November, extending an unexpected decline. Reasons for this trend are hard to find, but excessive commitments to house buying and the ubiquitous reach of ride-sharing in the country are two new popular theories. In Germany, an important business survey of economic expectations came in negative again, but much less negative than many were expecting and less negative than in November. Given the state of sentiment in Europe these days, this is seen as an improvement. And in Brussels, the EU has drafted a plan to prevent turmoil in the multi-trillion-dollar cross-border market for derivatives. The plan is necessary if there is a no-deal Brexit, which seems increasingly likely, and it is needed to avoid a sudden termination notices on these contracts. In Australia, business confidence dropped further in November. An index of business conditions also fell, continuing a downward trend in conditions that have been building all year. The business sector has lost some momentum, with confidence levels now below average, suggesting that businesses themselves think momentum will slow further. The partisan policy paralysis in Canberra isn't helping. US Treasury 10-year yield will start today at 2.85%, but their 2-10 curve has fallen to just under 11 basis points, a 3 basis point slip. Gold is unchanged at $1,244 an ounce, and US oil prices are marginally lower today to be just under $51.50 a barrel. The Brent benchmark is now just on $61.50 a barrel. And the Kiwi dollar is starting today little changed at 68.7 US cents. On the cross rates, we're holding at the new higher level of 95.6 Aussie cents and firmer at 60.8 euro cents. That puts the TWI up to 73.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.